Welcome to Rich Keys channel, where we unlock wealth one candle at a time. Here, charts don't lie and neither do we.
Disclaimer, not financial advice. The information provided on this channel is for informational and demonstration purposes only and should not be considered as personalized financial, investment, or trading advice.
Okay, welcome to Rich Keys Trading Channel. Today is Saturday, 2nd of August 2025. Time now is about 8:10 p.m. And I'm analyzing this stock called Upwork and want to share the analysis with everyone that follows my channel, especially from those that made the request. Okay, so I'll pretty much start the analysis on the technical side, and then we shall look at the fundamentals and see whether, it will be one worth investing into compared to the competitor, which is Fiverr. Okay, so that's be the program for the analysis. All right. So per technical analysis, this has a resistance around this $17 range. Currently, it's formed what we call a double top or a resistance top. Okay, with this kind of resistance stop, we're expecting price to probably fall somewhere from about where it is. The decline from the top was $17 right down to about $11. That's a $7 drop. So right from this base, would expect another probably about 5-7 drop. So that means we're looking to buy this somewhere around maybe somewhere around $5 probably, maybe $6. So if you're looking to invest, yes, and the fundamentals prove worthwhile, then you want to probably be buying somewhere around this zone, $9, $7, somewhere around 763. That this would be attractive support zones you want to place your entry and accumulate some there. Doesn't mean that this level will never be broken. It can be broken depending on how the market sell. I think this. Let me actually put one of my tools on here and see how far this goes. Okay, let's measure. From here all the way down to here. That's the pullback from the resistance. If I should carry this all the way back down to this level, price could come all the way down to 475. Okay, so per technical analysis, price could fall all the way to about $4.75. So for someone looking to invest, because we cannot be for sure that price will come to $4.90, what investors and big banks do is they accumulate. They buy a little bit at certain places where they find value, knowing that this is woefully undervalued. Okay. So if you see this is very much undervalued and you're looking to invest, then you probably want to buy some at the previous support area, $9. Don't put all your money here at $9. And then when it gets to somewhere around maybe $7, you buy some more. And when we come down to the target around 425, 475, you could accumulate some more and maybe wait for a bounce. Now, I personally wouldn't do that. I will wait till I see this thing turn around and it's at least above its 21 period moving average on the weekly or on the daily, depends on your flavor. Um, for short term, you could probably do like on the daily, you want to wait like what you had here, a breakout price went above the 9 and the 21 moving average, and you could buy, you could have made a little bit profit from $10 to about what, $17. That's a $5 to $10 profit. you know um for investors, I prefer the weekly time frame. So like for example, if you want to look at the weekly, someone that waited for price to break above the 21 moving average on the weekly, somewhere around here, and bought it around like $11 and decided to ride the moving average on the weekly till about, let's say you might not get this one because you don't know how far it will go, but you wait till price comes to break the 21, which would be somewhere here. So you would have made a good $11 to $40 profit you get out of it as soon as it breaks your 21 moving average on the weekly. This is a very simple trade strategy. And whenever price is crisscrossing both the moving averages, you stay out. This is where the big players are accumulating, and they will sweep you out if they can. So per technical and strategic view, I wouldn't be buying now. I will wait and buy at these support zones, or probably I'll just wait till price starts making a move above the 21 moving average to buy. But definitely it is in the buy zone. I mean, you got cycle low here. So here was a cycle low that gave you a bounce, and then we are approaching another cycle low here. So opportunity wise, yes, but could we keep declining even though we are at cycle low? Yes. Momentum is below zero, so there's no strength for it to go up right now. Nothing here to say that we're going up right now. So I wouldn't be buying. But let's look at a few important things on Upwork. Okay, number one, they have earnings coming up next week, somewhere around the 6th of August. Their earnings could maybe change their story, and investors may find them attractive. So you want to be paying attention to what happens with their earnings. The other thing that you might probably also want to look at is their fundamentals. Let's look at a few of their financial metrics. So performance wise, it's not been performing; it's been losing value. Um, Analysts are rating a 62% return with a 1 year target of about $19. So here gives you a good forecast. If you're looking at it from that perspective. Um, you know, yeah, I think I would wait for it to come to those support areas, to buy. Other than that, you might just be accumulating and sitting in the loss for a long time. Who knows when this company may turn around and their stock may be attractive to investors again. There are other fundamentals that I would like us to look at, and let me just show that quickly here. This is from a previous research I was doing. So this was in comparison to Fiverr. So if you want to compare this to Fiverr, okay, um, Fiverr has about a cheaper in terms of forward PE ratio. Fiverr is cheaper relatively. You're paying 12 times, their earnings for Upwork versus 8 times, 8 to 9 times on Fiverr. Okay, so relatively based on forward PE, Fiverr is cheaper. Enterprise value to revenue, again, here, Fiverr is probably the best winner here. It's about the same, but 1.8 versus 2. You know, yeah, I would say that Fiverr is doing better. Per EBITDA, Fiverr is doing about yeah, Fiverr is trailing at about nine times, 9 to 32 times, and it's relatively cheaper. Okay, but it's also very volatile. Operating margin, it seems like they're about the same in my opinion, even though Upwork is investing more and expecting a higher return. Revenue growth is out there or there about 9 to 15% year on year. And this about 11 to 15% or 14% there about. Fiverr is growing faster than Upwork. But then this is a big deal here. Okay, average clientele spend. So more of Upwork clients pay more money than Fiverr. So these people are making big bucks, per client than Fiverr, even though all these fundamentals were stacking up in favor of Fiverr based on clientele. So if Upwork can actually expand or scale out their clientele, then definite Upwork would be probably a better stock to invest than Fiverr. So this is just based on comparative fundamental analysis. But yeah, if you do believe that the analysts are right about the opportunity for this to go up to $19 as the immediate target. That's what the analysts are forecasting, about $19. Then yeah, if you buy it around, $9, $7, average your entry in so that your average is, let's say, about $10, then you can make probably about a $9 profit based on the analyst estimate. Now, of course, the all-time high, crazy all-time high was at around $60. Okay, so that means in the future, can price go back to $60? Yes, I've seen that happen. Where it forms a long base and their business become very attractive, they could probably go back to the all-time triple top high that was around $50 to $60. So that's my take on Upwork in its comparison from Fiverr, looking at it from the technical perspective as well as the fundamental perspective. Well, I hope this session is informative and the information is helpful to making an investment decision. Thanks for the time. Have a great trading week. Cheers.